Management, and Erin Gibbs, who is now also has a title of CIO, Main Street Asset Management. Thank you both for being with us. Erin, I'll start with you. So we got this PPI number in, and the year over year actually shows this big move here that goes back to 11 years ago, right? The highest annual pace of 8.6% from 11 years ago. So it's still real.
Yes, and when you look at even just inflation really since of March this year, I mean, it's just been skyrocketing. I would say the only good takeaway is that it's year over year, it's the same as September. It's this 8.6%. So at least we haven't even gotten worse from compared to how we were September, and month over month, we're just a little higher. So it's high, and I'm sure if everybody hasn't already felt it, this reconfirms that prices are much higher across the board, pretty much no matter where you look. I would say the only good takeaway from this report is at least it's not spiking any further than September. And it came a little below expectations. We were actually expecting 8.7 and it came in at 8.6. So very small, tiny positive news hidden within that report. But overall, there's a lot of inflation out there across the board.
Let's talk about small caps, Erin, but give me your thought on the fact that the 10-year is still below this 1.5% level.
Yeah, breaking below these highs that we saw in October, and in fact, even the longer duration bonds are really starting to drop. So I think what it's ultimately saying is the bond market saw this coming. I think that they're interpreting it as, there is going to be higher inflation for quite some period, but it's not going to be these levels, and so that's what we're seeing. Some of the shorter duration bonds come down, and that yield curve even flattening. So it's going to be sort of a stable inflation, but definitely not where we are now.
Quick thought on investing, Erin. I know small caps are on your radar.
Yes. So, for the past 2 weeks, we've just seen these record breakouts in equities, definitely clearly a risk on trade. We saw a bit of a break this morning, which I was actually relieved to see because we had 11 straight days of being up in the S&P 500, breakouts in the small caps. And so now today, of course, they're coming down, they're pausing, which I feel is actually healthy. So I think they just needed some excuse, some report to try to come out. But again, if the problem with the small caps, I was predicting that they would remain in that trading range as long as we saw high inflation. That's clearly not the case. They've decided to break ahead. Investors have decided to be much more positive and earlier than I expected. And it really does look like they are going to be some of the outperformers. So I believe that the Fed repeating that inflation is transitory perhaps has gotten through to investors, and that they're really believing it, and they're starting to take on more of those riskier trades.